Ideology of trading for somebody that has never traded before, thought about it before, or even been introduced to it before. One thing that I think about a lot is human nature to buy more than we need when we feel like the price is low. If you wanted a pair of shoes and you planned on spending $100, if you went into the store and you found those exact same shoes for $20, you're probably gonna buy 3, 4, 5 pairs because you were already willing to pay $100. You really only needed one pair, but because the price was low, you bought more than you needed because you understand that the price is probably gonna go higher. If I feel like something is low and I think that the value of it will go higher, we buy it with the mindset of the value of whatever asset that is goes higher. Within trading, we can make money whether the market is going up or down. So now on the opposite side of that, let's say I have a limited edition basketball jersey that's been signed. If I feel like I paid $200 for the jersey and I get it signed by LeBron James, that may be worth a lot of money. So now there's a value on that item. But at the end of the day, how I think about it, I paid $200 for this jersey. And now if somebody's offering me $20,000, $25,000 because it's been signed, well, guess what? I just made money off of that. Now, is the value of that high? Do I think that it's gonna go higher? Or do I think that I will have a problem and the value will over time go lower? If I think that it's gonna go lower, I sell, I get out of it. I take my profit. The value from where I started, $200, has went up. Let's say it's 20,000. Well, for me, that's high because I'm thinking about it from where I bought it at, the amount of money that I have invested into it. So now I take my profit and I pay myself. And now let's say the value of it goes down, whatever the case may be, I've made my money. So the ideology of trading is just really understanding charts and the value of something going up and down, up and down, up and down. I can put in my head a picture and I make a decision. Do I think the value of this will go higher or do I think the value of this will go lower? Within trading, there's multiple different markets that you can trade. Everything in our economy has a value. You might have a gold chain, you might have a silver chain, but understand that gold itself has a value. Silver itself has a value. And that plays a part in how much your chain costs when you go and do your chain shopping. So understanding the value of gold. Let's say gold is at $2,000 an ounce, and I believe that it's gonna go up to $3,000 an ounce. Wouldn't it make more sense for me to buy my gold chain while it's at $2,000 instead of $3,000? Because now you want the big gold chain. Think about it. For every ounce that you buy, you're paying $3,000 instead of $2,000. Okay, I bought my chain at $2,000 an ounce on gold. I pay $20,000. Now let's say over time, the value of gold itself goes higher. 2,400, 2,500, 2,700, 2,800. Let's say it gets to that 3,000. So if I paid $20,000 for my 10 ounces of gold and it goes up to $3,000 an ounce, how much is my 10 ounces of gold now worth? 30,000. So I bought the chain, I invested into gold, and now over time, the value of gold has went higher. So now when I go to sell my chain, I can get my money back. And I might even get more because the value of gold has now went up. This is the ideology of trading and how we can use it in multiple different arenas, multiple different markets. but understanding the value of an asset, it's gonna go up, it's gonna go down. It's gonna go up, it's gonna go down. We want to figure out how do we place ourselves on the right side of the market and make money whichever way it goes.